Good evening or good afternoon actually. We just have the market close, the closing bell just ran, and we are just 4 minutes after the closing bell on Friday. So we finished this week, the week 4 of the trading 2024. And today we have, Friday we have a so-called personal income and outlay. Basically, you have a little bit about the the income wage and also the the core PCA or PCI data, which is related to inflation and the wage increase. So number is positive. That's how we see the market react, right? So let's see. But today is closed less than yesterday close, right? Yesterday is closed at 488.03, and today it opened at 487, and it's closed, 487.46 right there. So here's our note rate for Thursday, right? Thursday is closed at 488. Today is open, below the close yesterday. And then it's closed, just below yesterday right there. And also it's a little bit below the open. So if you open the candle for daily, it's gonna be a very dozy candle right there. So let's see. It's gonna be a dozy candle, right? Yeah, in fact, it's right there. Dozy candle right there. You have huge dozy down close. Yeah, you see the dozy right there. So when you see that we'll come back to it later. Okay, we're gonna do a overall. Let's see. Yep. So we have a big week, and then we have a very huge next week. You know why? Because it's the earning of the big tech, Magnificent Seven, right? This week was Tesla, but next week we have the rest of them except Nvidia. And also next week we have the FOMC. Forgot that. That's the reason why. And the market is that meeting, right? The market is set to rally. You see that this week it really it really rally. You see next week right there. So let's see. If it come down, it will be epic, right? Because it's really high right now. It break all-time high. So we will watch carefully, see how we're gonna trade next week. But look at the price action today. Is Friday, but this is the last action. Normally we anticipate, Friday is kind of the end of the week, right? Not much action, but today the price action is kind of very beautiful, right? It give us a lot of opportunity to trade. Either way, you can trade long or short right there. That's how the market is behave today. But let's review the trade we took today. We took 2 trades, and we 2 consecutive trade, and we won both of them. So that's the good thing right there. Let me see what else we have. Okay. So basically for this our trade record we keep, right? So we check the first trade is a long trade. We get 84 cents, which is 2R. And then we take the second trade. It's a short trade, right? We check a 0.5R win. We get out early, right? We get out early. Yes, we get out early because it doesn't move the way we want. We get out early, so we get a quick win, you know, to 11 cents. But so far it's good, right? We get the win rate only 55%, but we get a profit in terms of the absolute value 32 cents. In the relative related to R, it's gonna be 2.7R so far. So we have a, you know, positive expectancy after night trade. So we just night trade into the year, and we have a good start right there. So let me see what the screenshot for this trade. We forgot to load that. Hold on, we need to load that trade in. Yeah. Okay, we got to go to real quick. So what's the entry total 5? So 1205. So basically we want to keep both. We keep the raw screenshot and also the one we load. So here's the one we have. Is that right? No. 11. No, that's not the one. Let me see. No, I think we entry time. Oh, 05? Yeah, so here is the trade we have, right? So basically we short right here, right? Sell stop at this level 488.68. No, this is the breakout level right there. We saw the order block, right? We see the doji, then boom, we go in. And our target gonna be very simple, this sell side liquidity, and we reach very low. So it's going to reach wall ratio right there. So 19 cents and we get 63, so very quick trade right there. That's our idea. That's how we take the first trade short right there. However, it's come out that we exit the next after that, right? We exit, here's our exit right here. No, that's not this one, exit. Yeah, we check half of an R, right? So we go in right here, and then we want it to be a follow through. Actually, it opened and it moved all the way here. It become a very big down close, but all of a sudden it go back up. So we feel something not right. So we get out. We get a quick, profits 11 cents, which is 0.5 R right there. 0.5 R, and that's how we take the first short. But if we look at the chart right there, you see it kind of we like, we need more bracket time right there. So we put our stop loss yeah, we put our stop loss just above this high, right? That's what we put our stop loss. You see, our stop loss is above this high, which is correct. However, we get a little bit nervous when this not turned to our way. But however, if we stay in the trade, it will a giant move up right there. But anyway, we are we feel a little bit nervous or discomfort right there. That's where we get out of the trade. However, we need to re-entry right here. The reason why we need re-entry right here, because we see the rejection right there. I mean, just take bracket right there. But if we, experience enough, we just stay in the trade without worry. Then we can have big follow through right there. So right here, it just scared the people right there, and we did get out. But if we are be patient, right? We did check screenshot right here. So if we re-entry, let's say the re-entry, right? Then we'll be good. We will have a big run. But you know what? When we saw this rejection, we get nervous because it's happened in the past, right? When we are in the trade, we get the price action move into our favor, and then it come back again our position. It's just the psychology. Just the psychology, go with the price action. But we learn our lesson. Next time we should be not nervous at all. As long as it's very low risk right there, right? We only risk that's merge, so we should not be worried. We should stay in the trade. But anyway, the lesson for us, and the trade is ending in profit, so we should not be complain, right? Everything is lesson. Okay, the second trade we take is we got a short, right? Hold on. Okay, this actually is the first trade, not the second trade. Here the first trade, not the second trade. Anyway, because we go in at what time we going? Yeah, we go in at 10:20. So that is the long trade, right? It's very beautiful trade. You know why? Because we see that you have a fall breakout at for 87.46. 46 right here. That's the level right there. You see, we marked that level, and we saw that it closed below that level, and then it go up and it retests that level again, and we see rejection 1, 2, 3, 4. 4 rejection. When we watch in a real time, we saw this candle is move all the way here. All of a sudden it's closed, you know, become a dozy. So we know that is the signature of a 4 breakout. So we go in right after that candle right there, and we experience a little bit discomfort right here because it go right there, go back retest. But we have more experience now, right? We stay with the trade better. We would say that. And then after that, we're good. It hit our target right away. So we have, you know, 1 to 2 R right there. So we have 2 R. And on the second trade, we took another half an R. So today we have 2.5 R right there. That's a really good winning day for it right there. So actually, if you watched the video earlier, we about to move our target up here. So we had, you know, 1, 2, 3. But we couldn't move fast enough, so our target got hit. But we're happy with 2R. Otherwise, we got 3R. So total for today, we got 2.5 R. It's a good day for us right now, which is right here. We're going right here. That's the first trade, and we target just right here, right. So we got 2R. But if we let it run, we have, you know, yeah, we'll let it run to 0.5 standard deviation. That will be perfect right there. That's the required target that we need to hit right there. That's a beautiful long setup right there. And we have a beautiful short setup, but we short right there. That's a beautiful one right there. But we didn't stay in the trade when we saw the move back a little bit. We scared. We take a early profit, just half an R. So that's the idea right there. And right here we have a beautiful setup right here also. Look at this breakout level, right? You have breakout level and you have a full close candle down close below that, and you have a little bit rejection, like give you a signal to start to go long, and then you have a dozy candle right after that order block, and you have rejection to the outside right there. Then the next candle we're gonna go in. We put our, you know, going by a stop at this order and put our stop order. So we reach about 35 cents, and we will target at the range of today, right? Today is the range we identify right there as a breakout level at 48.12 right there. So we have 1 to 3 reach 4 ratio. Very beautiful. We did take a screenshot of this, so let's see. So here is 1355. All right, 1355. Where is our screenshot? 1355. Okay, right here. So basically, start from here, 1315. We start see the breakout level is established, right? Or form, right? For 86.88 right there. And we watch. We see this is a order block right there. It take the sell side rate right there, and the dozy candle do another sell side rate there. So it's a very bullish signal to go along right there. For us, right? So because when we do the 4 breakout setup, sometimes like we're casting the falling knife. And in order to avoid that, we have to make sure we have a a strong signal, or many confluent as possible, right? So we can give us the confidence or conviction to take the trade. And this is one of this example right here. You said beautiful, right? So if go here, we have question in mind, right? Can we go in and go long? What if it's a falling knife because it keeps falling, right? But if we look carefully in the detail, we saw this is the signature right there. So you have right here. So we have the breakout level formed at 13.15, right? This candle right here. And then right after that, we see an auto block. The auto block, which means a candle close completely below the breakout level. And then we have a doji candle right after the auto block. That is the signature for a fall breakout gonna play right there. And the next candle, the entry candle, the open have to be below the breakout right there, and exactly it happened right there, right? It's below the breakout level. So we have everything right there, right? We have the breakout level form, we have auto block, we have a doji candle, and we have sell liquidity rate right there. We have all three condition or signature, or you can say fingerprint right there. So basically the algo leave a fingerprint for us, so we know that what's the next move we're gonna make. That's the beauty right there. If we study the markets right action enough, we're gonna see that happen every day right there. So the candle entry for this at 13.55, and this the open have to, that's the condition, must below the breakout level. Then we put in right away a buy stop. So when it move up, it will carry us into the move, and we put a stop loss right at the last sell liquidity rate right there. So basically we rate 35 cents, right? And here's another confluent factor that we need to mention in terms of the DR model, right? You want all this action happen between the DR 0.5 and 1.0 right there. So basically around PM, after PM section, it did hit the 0.5, but it failed to hit the one standard deviation right there. That means that the algorithm don't want to bring it all the way down. That means the buyer step in right there. They don't let it fall into one standard deviation. So that gives us the good another signature or another fingerprint that this stuff is gonna be for breakout. This setup is for breakout. And look at this, it exactly happened. It did pull back right here a little bit, right? But it's completely above this breakout right there. So if we stay in this trade and don't get nervous, you remember we got nervous when it retest a little bit, but we should learn from our experience. The same right here. It will not be easy. Always discomfort there. In order to get to our target, we have to endure. We have to seek through, the discomforts, or seek through scare in this nervous moment for the lack of the word right there. Yeah, we have see through, and then we can see our target got hit. Exactly, it hit at this level, right there. And we have 1 to 3 reach the ratio, beautiful right there. So breakout level at this time. And you see that today we mark this level, right? This one and this one, because the new release at 8:30 right there. You see the range right here, right? The market's close exactly in that range right there. How beautiful, accurate it is. Right, this is the 4 breakout we identified. 4 breakout to the upside after the first 30 minutes right there, and we see it can go up, create a short, boom, go down, and then it close within that range. You see how the algo really operate right there. We're so glad that we learn every day, and we get there. We get there. The more we trade, the more we practice, we feel more confident about ourselves, ability to identify the key level. That's the whole idea right there. The key, breakout level. So we can see this, algo run, all day. The pattern it run to identify the key level. Then we just trade around that key level without any issue. So today we have 3 key level right here. We have 488.12, right? And then we have 487.46, and then we have 486.88. That's the key level. That put into our journal. Yep. So basically, journal. And today is January 26, 2024, and it's Friday. Yeah, and then what's spare? And then we have key breakout level. That's our annotation right there. So the first key breakout level we see so just right out quick with 488.112, and then we color them purple so it's easy to readable. For 87, 46, and the last one is 486.88. That's 3 key level that we trade around for today. So that our job is every day to identify the key level and see how the price react to the low key level and it leave at the hallmark or leave at a signature, or what you, for lack of the better word, is fingerprint, and then we just let market show its hand. That's an idea right there. Then we just trade. Very simple. Keep it simple, just like that. Okay, what else we want to cover for today? Okay, let's remove this for now. We want to look at the 4-hour time frame, right? Yeah, the daily time frame. So here's the daily time frame for so many notes right there, but actually, right, let's identify right here. It's quite strange, right? You have breakout level right here, and this is gonna be an auto block, and then you have a doji candle. Then you go in and you short them. Yeah, we can short them if that's the conviction we have. So let's look at the 4-hour time frame to see if the source setup is still there. Basically, we make sure that the source setup is on all time frame. Okay, so we identified this is a breakout level, right? So we have auto block, but we boom, it moved away from auto block. Wow, it tells us something right here. We see the short right there. You see that this breakout level, auto block, boom, and you have a fair value gap, and it go up and it retests auto block fair gap right there. But you see it just rate the buy side, but it's closed today. It's closed below that auto block, so it gives us a bearish signal right there. Let watch next week. We have a little bit buyout right now. It's bearish. So if you look at the price action, it gives you an idea. Also, if you look at the RSI level, you see right here it make a high, right, which is it rate. It rate the buy side liquidity, but look at the diversion from RSI. It just diversion. It make a lower high. So that's that thing. This signature is bearish. So let's see how the market gonna react, next week. Anyway, we got to go. Bye for now, and thank you for your time and interest. We are always grateful for these opportunities, and we are enjoy what we are doing, and success is come our way. Bye for now. Have a good, wonderful evening.